Okay, hello everyone, and welcome to today's call of the Crypto Oracle. Of the Crypto Mondays Collective. Old habits die hard. We've got a great featured guest today, Sid Powell from Maple Finance. They're doing some, and have been for a while now. I think some of the most innovative stuff going on in DeFi. So, yeah, happy to have him back. I'm tonight have the pleasure of being at Crypto Monday Porto, the 37th Crypto Monday chapter. I'll have visited. It's being thrown by Irina Canova, who also does with Marina Crypto Mondays Lisbon, which I've been to 6 times, I think. And my first time in Porto, it's awesome. And then next week is Crypto Monday Paris before Paris Blockchain Week. So that'll be fun. And, we've got a great Crypto Mondays there planned with Senya. And yeah, with that, I will turn it over to Alan for some updates. And Sid, thanks again for joining us.
Yep. Hi, everyone. We just got some quick updates for those who haven't seen the new website. We've got that live. We have some new chapters, Baltimore, Dublin, and Lou just mentioned that he's in the Porto one tonight, along with Robin. So that's taking off. We got Charleston, Sao Paulo, and Austin as new chapters that are starting their meetings. Also have the Decentralized AI Agent Alliance. We have a member showcase coming up, so if you're a member there, be sure to attend to see what everybody else is doing. And the next general meeting is on April 21st.
Yeah, we should actually send out an invite to all the collective members. They should attend whether they're DIA members or not. I think it'll be fun for people to watch.
Yeah, that'd be a good idea. Okay, our mission at DIA, foster development, proliferation, decentralized AI. So we've been really working in subgroups to be able to do those. We have new membership. The latest ones are up. I think we're at 57 we have here. And we keep putting the logos on our website. We have actually 6 subgroups. We have another one that hasn't been posted yet, which is a subgroup optimization that we will be pulling the best practices from each one of them and sharing them with the other subgroups to keep things moving. We're still working on the Monday. We're getting close to something that early adopters can work with, and we'll get some feedback on that. And with that, I think we can hand it over to Sidney and have him present.
Thanks, Alan. Thanks, everyone, for having me. Let me just see if I can share this.
Yep, just stop sharing, and if you need access, Lilia can provide that. There we go. Looks good.
Very good. I think we're good. Awesome. So for those who don't know me, I'm Sid Powell. I'm the CEO and co-founder of Maple Finance. So we are an on-chain lending platform or on-chain credit. Increasingly, I would say we're kind of shifting into being almost an on-chain asset manager. But the core business for us is over-collateralized lending to institutions. So we have very much a focus on yield and credit products. So if you just look at the slide that I've got up in front of us, so you can see that TVL at the moment for Maple is it's just under 800 million. We've got the breakout of products there, but we've been around for over 4 years now. Originally, we did under collateralized lending, but more recently, since 2023, with the gap in the market for over collateralized lending, that's been our primary focus. And then this year, we actually released a product which does BTC yield from staking in the core ecosystem. So our goal for the rest of this year is to take that number from 800 million TVL at the moment, which includes the loans outstanding plus the collateral on the platform, to 4 billion. So what I'll do next is I'll walk through each of our products in a little bit more detail. So the first one that we have is Maple Insto. So this product is composed of really two limbs. So over collateralized lending against BTC and ETH, which is the core product. And that's what we refer to as blue chip. and then our high yield product, which includes a wider set of collateral. So it's a little bit less conservative, but gives you a higher return. And that includes things like Sol, XRP, wrapped forms of ETH, and BTC. But together, these products are sold to institutional counterparties and accredited investors. So it's available in the US, provided that you qualify as an accredited investor. And the key difference with this Insto product is that it accepts native BTC as collateral. So it's very different to some of the other products that you see in DeFi, built around yield and borrowing and lending. I'll go into more detail on each of these. So just bear with me. Second product is Syrup USDC. Now, this is really the same product under the hood. It's institutionally over collateralized loans, but it's available broadly in DeFi. So we've tried to make Syrup USDC integrated with DeFi protocols like Pendle, Morpho more recently, which we announced last week. And then it has DEX liquidity. So it's the same over collateralized lending under the hood. It's just within a wrapper that makes it usable and composable throughout DeFi. And this is around 350 million of our TVL, and we're really calling this a form of liquid dollar yield. And then the third and most recent product that we've done is the BTC yield product. So this is yield in kind in BTC. So if you put BTC with us, you get your yield back in BTC instead of points or something else. It sits in qualified custody. And what's happening on the other end is that we're staking the BTC in the core DAO ecosystem. So it's one of the BTC L2s. So it means we get back rewards in core tokens, which we convert into BTC to pay the yield. And one of the things we're really excited about with this partnership with core DAO is releasing a liquid staking token for BTC in the next couple of months. So let's look at these in a bit more detail. So you see, Maple Insto is the biggest. It's the biggest product that we have on the platform. It's now over 200 mil TVL. But you can see that the big driver here, particularly this year, has been the traction for high yield secured. And what's happening here is that the yields are pretty significantly outperforming what else is available in DeFi. So high yield secured at the moment pays around 11%, and you can compare that to yields across Aave and other DeFi lending markets, which are currently sitting at around 2.5% on USDC. So as we've seen the market kind of track sideways in prices, people start to become much more interested in yield on stable coins, as it stands to reason they're just no longer trying to chase as much beta or price appreciation from other assets. So you can see that most of the growth there has come from the high yield secured product, and you can see the rates comparison there. So high yield, which is this blue line, is tracking at around 11%, and even the blue chip secured product is still paying around 7%, and that compares with about 2.5% on other DeFi money markets at the moment. But the big focus for us here is more traditional finance partnerships. So recently we ran an announcement with Bitwise, where they were participating in one of our institutional pools, and we've seen a lot of appetite from larger traditional finance allocators who they understand the core product of Bitcoin-backed lending. And indeed, recently over the last few months, you've seen players like Cantor Fitzgerald announce they're looking to get into Bitcoin-backed lending. I think this type of product is much more promising than some of the real-world asset tokenization that you've seen to date, because it's something that you can't just ring up your banker at Morgan Stanley to get. So you can't buy a fixed income product where the collateral is Bitcoin from any of these Wall Street banks. It's something that's unique to the crypto space. So I think that's why we're starting to see a lot more penetration coming in from outside crypto. And indeed, I'm really interested in this idea of could you take this tokenized wrapper and turn it into something like the kind of the agency mortgage or mortgage-backed bond that we're used to in traditional finance, which was indeed where I spent a lot of my time when I was in banking. So I think that represents one of the $100 billion plus opportunities in this space, is taking loans against Bitcoin, and kind of standardizing the features. So 70% LTV against Bitcoin. Bitcoin's held in custody, short duration, so you can get your money back quickly. And these things currently pay yields that are comparable to investment grade bonds, but it's not available anywhere in traditional finance. So I think if we can tokenize that, it becomes a product that's really saleable to traditional investors. And the other big focus for us is landing some of what you would call wholesale facilities from banking partners and credit funds. So I think that's there are several conversations that we have ongoing at the moment, but each of those would allow us to meaningfully expand this product. Second one I wanted to talk about was Syrup USDC. So you can see that this product with USDT and USDC has grown to about 350 million in size. And this really kind of points to the recent growth that we've seen in DeFi distribution. So you can see that sharp uptrend over the course of this year. Whereas in November and December, we saw a bit of a contraction, which correlated to people going more bullish on the general market and just wanting to own Bitcoin or Sol as those assets were running up in price. Now that they're kind of sitting sideways, people are much more interested in getting yield and kind of sitting in stable. So that's why we've seen a big uptick in TVL there. Now, how we grow this product is you've got to look at things like collateral integration. So we just last week announced that Morpho was accepting Syrup USDC as collateral, which means that DeFi yield funds can loop it and borrow against it. We're in conversations with Euler as well. And then we've had an integration for some time with Pendle, which allows people to fix the yield that they're earning. So that's been another really interesting one. And then most recently, we've actually had an announcement up on the Sky forum for them to make a balance sheet allocation to the Syrup USDC pool. So that'd start at 25 mil and then increment 5 mil a day. So we're really excited by these types of partnerships. But I think when you have a product that's active in DeFi, you can see that partnerships are so important in terms of getting distribution. And again, as you look at the yields, you can see this is partly what's driving the interest in it. So even though those yields have come down, they've still outperformed the rest of the market. So with Syrup USDC earning around 7%, that still puts it about 4.5% wide of what other DeFi money markets are paying. Even Stake DAI or SUSDS is around 4.5% at the moment. So you are getting a pretty good yield pickup there. And then the final growth avenue that we would look at would be things like exchange earn programs. That's a really tough market to crack because it's just a very long enterprise sales process. But once you land one of them, you can see it's incredibly powerful. Athena, I think, did a great job of landing the Bybit, the Bybit program where they keep USDE on the platform, and that's actually flipped USDC on that exchange. And then the final product I wanted to talk about was the BTC yield. So we launched this just over a month ago, and you can see that it's quickly got up to around 40 mil. And I think this speaks to the size of the opportunity for giving folks a yield on their BTC. Most people are holding it idle in custody accounts or cold storage. And we've seen that until this kind of Bitcoin DeFi ecosystem has come about over the last 12 months, there really wasn't many attractive opportunities to park your BTC. But what we've done here, so we started just over 5 or 6 weeks ago, and we've now got around 500 BTC staked in the program. But you can see that's very small compared to what's staked in Babylon, which is the largest staking program with 53,000. So we're around 1% of that at the moment. So you can see there's a huge growth opportunity there. But the reason why people like this is you get a BTC denominated yield. Your BTC can sit in custodians or in custodial accounts. So BitGo, Copper, soon to be Anchorage. There's no slashing risk from the core staking mechanism, and the program's live at the moment. So the core actually does have a token that's live in the market, so you can actually convert and realize these yields, which you can't do with most of the other BTC staking options out there. Most of them are currently points programs that are still locked. And the big growth opportunity, aside from just selling this to institutions, is the release of this liquid staking token. So I think that's really exciting because you'll be able to port that LST BTC around DeFi. And indeed, if you're a trading company, you could post that as collateral. So I think it opens up exciting integrations for platforms like Deribit, which recently onboarded USDE as a form of yield bearing collateral for trading companies. So if you get a lot of them are posting BTC, so if they can post yield bearing BTC, I think that's immensely attractive. So we're very excited about that partnership. So moving on from the products, I thought I'd just talk a little bit about kind of overall progress and health at Maple. So Q1 we got quite a bit done. I think a lot of folks in the community have been really focused on the Coinbase, getting the token support on Coinbase. So it's now available there as of 3 weeks ago. We have the ongoing migration happening, which will round out on the 30th of April. So if anyone on the call is holding MPL tokens, do make sure to swap them across to Syrup through the migration portal by the 30th of April. And then we'll have a governance vote on what to do with the unmigrated MPL. And then another thing that we posted about over the weekend was over Q1, we've been using the revenues that have been earned by the protocol, which are currently in between 5 to 6 million annualized, to repurchase Syrup tokens. And then those are distributed to people who are staking Syrup. So it's part of the staking yield that's currently around 3.8% annualized. But I think fee switches and buybacks are going to be an important way that DeFi projects and other on-chain projects differentiate themselves from some of these zombie L1s and L2s that we've seen, kind of continuing at very high FTVs despite very little in the way of customers or usage on those chains. So anyway, we've had the buyback in place. I expect that'll continue over the course of this year. And general guidance is revenues, which are, as I mentioned, sitting between 5 and 6 mil. If TVL grows, the protocol revenues would grow. And we currently spend around 6.5 mil a year. So the protocol is getting reasonably close to profitability. And if we see some of that TVL growth continue, then yeah, it would be one of the few DeFi protocols out there that's profitable and cash flow positive. So anyway, I'll pause there. That was all I had in the way of slides at the moment. You can see I've got a little revenue chart there of how we've been tracking so far to date. But happy to open up for questions.
I don't know if we have anybody who's you just want to raise your hand or jump in at this
Thank you,
point.
Sid, for the really awesome presentation. My name is Albert. I'm the
Hey,
CEO of
Albert.
the AI Startup Lab. Just a quick question. Are we able to is it live right now where we can put up like 10 Bitcoin and get a loan out like stablecoin?
Yeah. So we run those OTC. So you'd pledge the Bitcoin to us, and then we can issue a stablecoin to you. So it is live. We've got over 200 million of loans outstanding against it at the moment.
Wonderful.
So
And then
happy to follow up after this.
what are the terms like? Like what's the interest that we pay back, like the length of the loan, and then like what
So we can do open term, and generally we can go up to kind of 6 month fixed term maturity. Interest rates at the moment fluctuate. If you're saying like a 70% LTV loan, so you post about $145 to take out $100 loan, interest rate on that would kind of be, call it like mid to high single digits. Rates have been generally sort of trending down over the last few weeks, but let's say it's probably like something in the 8-9 range.
All right, so it's a variable rate. Okay, and then what happens if
No,
the
we would do a fixed rate over
it'd
the
be a
term.
fixed rate. All right,
Yeah.
wonderful. All right, and then if I may ask a follow-up question, and then
Sure.
let's say the Bitcoin goes down, is it liquidated or
We do two levels. So if 70% is your starting LTV, we'd have a margin call at 80%. So then you get 12 hours to post more Bitcoin, and then we'd do a liquidation would be 85% LTV. But
Liquidation.
we reach out once you hit that margin call level at 80% LTV. So you get an email notification. We'd reach out in Telegram, and then you have 12 hours to cure. And if you let us know that it's on the way, then we can work around it with you.
All right, so like let's say it's like 100 in Bitcoin, we get 70% out in stable coin, and then if it drops to 85%, then it's liquidated. We have 12 hours to put more Bitcoin in. Is that what you're saying?
Yeah, so you've got 12 hours to post more, but if it keeps going, like if the price kept dropping so that you hit 85 LTV, that would be our stop loss level. But we can negotiate, like those levels are negotiable at the start. What I generally say is like if you've got people, like a prime desk who's kind of staffed and you're staffed 24/7 with people who can respond, you can go to a higher LTV. Whereas if you're not as active, then it's better to set kind of more conservative margins.
Right. I'm just curious. I mean, like, what was it considered like normally like let's say I put up I don't know my house is collateral or something, right?
Mhm.
And the property house depreciates, the loan is
Yeah.
still active, right? And as long as I'm paying the loan and interest back, then the collateral is okay, right?
Mhm.
It doesn't get what was your consideration like versus like a more classic loan versus like this model?
Um, the Probably the better model is like if you look at equities, right? So if you take out a loan against your equities and the equities drop in value, you would get liquidated. I think housing's a little bit different because it takes 6 months to sell a house anyway. Um, and but it would housing prices typically, it's rare to see them drop 20%, let's say. So normally if you do like a home loan, let's say your starting LTV is 80, it's pretty rare for a housing market to drop 20%, whereas it's not super rare for Bitcoin to drop 20% over the course of a year.
Yeah, okay, I get it. Thank you for your questions. We'll
No,
love
no,
to
they're good.
get in touch afterwards if that's possible. Thanks.
Yeah, no, that'd be great. I'll post my details for Lou and Lilia to share. Tim,
Wonderful. Sid.
Hey, Sid, good to see you. So, a couple
likewise.
questions for you. You mentioned that your focus is institutions, but now
Yeah.
you have Syrup USDC, which will be a bit more DeFi friendly and accessible to all.
Mhm.
So, just setting the stage with that. Now, who do you see actually putting money to work in your protocol now? And what has been driving the growth? You mentioned that rates are now favorable. Is it that? Are you layering on some incentives? Is it that your direct sales initiatives or your strategic partnerships are really moving the needle for you? Where's all this growth coming from?
It's a good question. And just to clarify the point around the institutional side. So, um, partly what I'm referring to is on the borrower side. So we don't do retail loans. Unlike let's say two peers of ours might be like Arch and Ledden, who will both originate loans to retail. So on that side of the business, it's all going to institutions on the borrower side. But then as you pointed out, on the sourcing capital side, we have kind of a mix of institutions, which is Maple Insto, and then retail, which can come through Syrup USDC. But just moving on to the second part of the question, so where's the growth coming from? I'd say it's probably a mix of all three, but I would award probably the strongest attribution right now to market conditions. So with Bitcoin kind of hovering in this low 80s range, folks are looking to be less exposed to market beta, so an expectation of appreciation in the price of Bitcoin, um, and they're more interested in picking up yield because the forecast for where Bitcoin could end up at the end of the year is much more variable at the moment. So there's less folks confident that they can make 15% just sitting flat in Bitcoin. Um, and hence Hence, we're seeing folks reallocate more to stables. And that's why we're seeing an allocation. That's why we're seeing growth in the TVL there. We do a lot of direct sales outreach efforts, and I'd say some of them are starting to bear fruit. So, if our sales team can land somebody who puts in 10 or 20 million, that really moves the needle for us. But at the same time, it becomes easier to have those conversations when you have market conditions as they are at the moment. So that yield outperformance, I think, counts for a lot. But the folks who are putting in, where we're picking up a lot more at the moment does seem to be kind of high net worths and whales reallocating. You can see that there have also been outflows from other DeFi protocols that have shifted across into Maple. And then the other one would be, if we complete this Sky partnership, and if we land one of the TradFi institutions who's looking at giving us a wholesale facility, those would each also move the needle quite a lot.
And are you layering in some syrup or maple incentives to make this more appealing to the participants?
We do a little bit on the Syrup USDC side. We don't do any on the Maple Insto side, and indeed on the Syrup USDC side, we've been tapering that down because obviously over time you can't pay out more than you receive in interest income, or in NIM spread for us, and so we're getting to the point where that's kind of trickling down to towards zero at the moment. I'd say recently it's probably averaged about 1 to 1.5% per year.
And then the direct sales team, are they going after crypto natives, or are you also
For the most
focused
part,
on
yes.
enticing some capital in from outside of the industry?
It'd be great to get capital in from outside the industry. I would say to date, I've seen very little come in so far over the last, call it 6 months, probably the best time horizon. That being said, where we're starting to see green shoots is on some of those, some of those traditional firms who've announced they're looking at Bitcoin-backed lending. Cantor is probably the most obvious example. So they have about 2 billion to put to work in public announcements. And then there have been a couple who have been on, like CNBC News or CNN talking about doing Bitcoin-backed mortgages. To date, though, those inflows have not actually materialized yet. I think they're still kind of works in progress.
Thanks, Sid.
Good questions.
So if there's nobody else at the moment, I'll jump in with kind of current events. What do you see happening with?
Well, I was gonna ask. I couldn't find the raise hand button. Sorry, I don't know if there's something wrong with my Zoom, but
Go ahead.
Sid, yeah, I was gonna ask about Treasury. Yeah, it looks like it's working for Greg. I don't know what's going on. I was wondering about insurance contracts or for using Bitcoin for insurance companies itself. Is there any thought about that?
As in using Bitcoin for which aspects of insurance, Praveen?
Well, we have a Bitcoin insurance summit coming up this month. So there's going to be insurance companies, insurance agents, and just people like that's more institutional side, and then obviously regular individuals for their own personal purposes. But maybe it's just a general question of what's the use of these contracts for the insurance market. I know insurance in general uses a lot of exotic finance.
Yeah. No, happy to talk to it, and I can kind of freewheel on this a little bit. So, the most interesting product I've seen in kind of crossing Bitcoin and insurance is probably Meanwhile. So, Zach and the team over there. So that's a Bitcoin denominated life insurance product wherein you contribute Bitcoin, and they target something like it's like a 2%, effectively a 2% in-kind return in Bitcoin per annum. But what's interesting about it is it's tax advantaged. So the goal is that at the end of your life insurance product, you return 2x the Bitcoin. So you're effectively trying to increase the unit number of Bitcoin that you hold, and it's tax exempt. So you put in 2 Bitcoin, and then at the end of the life insurance policy, it pays out 4 Bitcoin, which is tax free to your kids. So it's like it's effectively an estate planning product that's tax optimized. So I think that's pretty interesting. And then the other crossover I'd say is insurance companies are generally pretty big fixed income investors. So if they wanted to maximize the yield they're getting, they could effectively purchase some of these loans or fixed income products where the loans are made against Bitcoin, because they'll be getting a yield pickup that's commensurate with investment grade bonds or even higher than investment grade bonds. However, they're not taking kind of nearly the same amount of credit risk given the over collateralization level, and they're much more liquid. So it's not like a 3 to 5 year exposure, although typically that's not the length of exposure is not really a problem for insurance companies because they have long dated liabilities and assets. So that's one of the other ways that I could see insurance companies working. The other thing I'll just add as one final comment before I finish up on that question is I've seen a lot of on-chain insurance products. So to get effectively reinsurance capital to provide capital relief to insurance carriers. And those products are generally, I would say, on the higher side of yields. I think like yields north of 20%. I haven't participated in any of them myself, but I've spoken to a couple of firms doing this, and it seems to be a kind of interesting and growing, you know, growing overlap between insurance and on-chain or DeFi finance. I think Re is one of the companies I've seen that seems to be doing pretty well and is just like printing revenue from it.
Cool. Thank you.
No problem. Thank you.
Hey, Sid, I had a question that I just posted because I couldn't figure out how to raise my hand either.
Steve. Yeah, I've just seen it. Salt lending.
Yeah.
So I think I mean at heart the principle of the product is kind of the same, right? Salt was doing loans that were over collateralized with Bitcoin, and by having liquid collateral, they were able to kind of protect their credit risk. At heart, it's kind of the same product. I'd say that the difference is in the execution. So Maple's product, we segregate the lending strategies. So one of them, we just have Bitcoin and ETH-backed lending, no rehypothecation. Then the other high yield one is segregated so that the two don't commingle loans or credit risk. And the high yield one produces a bit of a higher yield by accepting other collateral like SOL or XRP. And then I'd say another element is transparency. So with Salt, BlockFi, Celsius, the others, generally it was like one entity that kind of aggregated all the exposure, and it didn't provide any reporting on how many of the loans were collateralized versus uncollateralized. And indeed, over time, a lot of the loans kind of shifted to being uncollateralized. They never reported on loan performance, like which ones were paying versus which ones weren't, or the kind of the equity, the equity capital buffer to absorb losses if they materialize. So we try and kind of provide all of that reporting. So the loans are on chain. You can see when payments are being made. We actually post the data tape of all the loans on our web app as well, so you can see how much collateral there is against each loan. And we produce monthly performance reporting around it. So that's probably the main way that we try and differentiate. So differentiation is more in the execution rather than the concept of the product.
Okay, thanks. You're not. It sounded as though there's also a distinction related to working with retail versus
and Salt was doing more retail lending. Because they were earlier and everyone was doing kind of retail lending at that point, whereas our loans would only go to, a hedge fund, an OTC desk, a centralized exchange, a large family office, or professional asset manager. When we give out loans, we're not giving them to retail. So that means generally you're dealing with stronger balance sheets rather than retail clients. There's less of kind of like a regulatory footprint required, and you're less likely to have kind of, if you liquidate them, it's less likely to be challenged.
Okay, got it.
Yeah.
Right, less regulatory footprint, less likely to be challenged if you liquidate, and also probably you get better information.
Yeah, I mean, they produce, for the most part, they produce management accounts. So you can kind of get a look at the financials and at least understand where it comes from. Whereas, with retail, often some of the more difficult aspects of running a retail lending business are that, if you like liquidate a client because they haven't paid, they'll challenge and say they didn't understand the product they were signing up for.
Right.
And you get penalized or you get fined. You also need a credit license in any state that you operate. Whereas
Right.
when you're dealing with more sophisticated counterparties, they're just deemed to be more sophisticated, so they don't require those kind of protections, and they're much more likely to be able to post collateral. Like it's it's also just a more scalable relationship in our view.
Okay, thank you.
No, you're welcome. Good question.
We got Greg next.
Cool, thanks. Hey, Sid, very nice to meet you. Thanks for the presentation. I was wondering, on the lending side, where's the interest these days in terms of length of term, if you will? I've got, say, 10 BTC, or actually, no, let's take it to a stable. Where's the real interest right now in terms of length of, length of contract, length of commitment there?
Yeah, it's a good question. So if you're lending stables, I'd say like the at call rate, like the rate you can lend at and get your money back tomorrow, is probably around the like 7%, low sevens mark. That's we've got that in the BTC backed lending product, and in Syrup USDC. If you're willing to go out to 6 months, you can get about like 1 to 2% higher. Like
Okay.
We're often willing to kind of lock in a higher rate,
Sure.
if we can get it for 6 months, and that's just kind of reflective of generally there's very little supply at kind of 6 to 12 months for stables, so it's much harder to lock in those rates, so people are willing to pay a premium for them. Rates like being 7, that's come in. So in December it was north of 10, like it was around 11, 12. If you see a bull market, like if we kind of enter a bull market, those rates will go up because the basis for BTC will also go up, so the rates people pay to borrow against BTC will go up. Right now, I'd say we're kind of in a bit of a holding pattern around this sort of 7 mark.
Right. So, and that corresponds with the demand on the borrow side as well, presumably, since you're acting as match principal or matched agent, all depending, I suppose. I haven't looked through it too much.
Yeah, similar.
But yeah, but I
Effectively,
guess it depends
we
on the
borrow as
demand on the other
principal.
side.
Yeah, we borrow as principal, but on the other side, it's other borrowers. So we just take a small spread and then kind of pass through the rest to you.
Yeah. Okay. Okay, that's great. Thanks so much for that. Appreciate it.
No, you're welcome. Good question. And then I had a question from Boone. Yes, XRP can be used as collateral. We actually have 4 loans out against XRP collateral at the moment. So we're super interested in XRP collateral. I mean, super liquid, really large FTV trades around the world. So that's XRP is good collateral.
Same
Awesome.
same type of terms, are the rates similar to BTC, or what is the
rates are a little bit higher than BTC
collateralization?
because we've got a fund out of the high yield pool, which have the higher cost of capital. And then LTVs are a bit lower. Like I think the last loan we did, generally XRP we're kind of quoting around the sort of like the 50% LTV mark, whereas Bitcoin you can do, if you're an insto borrower, it'd be like 70% LTV. But again, that's negotiable. It kind of depends on the size. But we definitely have appetite, for XRP collateral.
Awesome, thank you.
Okay, I think I'll jump in with just more of a macro question here. You've got Larry Fink raising the alarm from BlackRock on the U.S. losing its crypto reserve, not crypto, fiat reserve as a reserve currency of the world. And you've got all of these tariffs and all this chaos. I mean, how do you see that affecting the longer term trends on what you're doing and kind of a direct effect with you guys?
Well, if you're looking at dollar sovereignty as kind of the key question. I mean, macro is always kind of tough to call. But I would say macro has the indirect impact of how macro impacts crypto prices or risk asset prices, let's say, because Bitcoin and others trade as risk assets. That kind of drives the interest rates we can lend at and how much people are wanting to borrow or lend. But on the dollar dominant side, it's tough because what I would say is observationally, I haven't seen a pullback in kind of dollar dominance. The euro stables market has not taken off. Europe doesn't generate enough surplus income to have like kind of a vibrant capital markets. So really what drives the US dollar dominance is that it has the best capital markets around the world. And so as long as you have these trade deficits between the US and the rest of the world, so Europe um, sells more products to the US than it buys from the US, which means it ends up with a surplus of capital to invest, and it turns around and plows that back into US capital markets. I think that the trend is just going to continue, and it's hard to see that reversing. I think the only thing you could see reversing it is if another country kind of becomes the dominant place to invest from a capital markets perspective, or another country starts selling more goods. I mean, things that I'm alarmed about would be, it seems like China is quite dominant now in kind of electric vehicle manufacturing, like BYD seems to be pulling away. And I think that would be the slow trend at which this reverses, right? Like if that becomes ultimately more attractive and then people choose to invest in that capital market because it's just producing more goods and better quality goods, that would ultimately be the thing that kind of unseats US dollar hegemony. But in the meantime, there aren't other countries that are kind of attractive to invest in or that have the scale to absorb so much in the way of capital markets inflow. So my observation is that I continue to kind of see US dollar dominance, and I think stable coins kind of entrench that and reinforce it rather than destabilizing it.
And what about companies or governments even moving to Bitcoin strategic reserves? I mean, you even got companies, what was it, GameStop announced that they're doing like a 1.3 million.
Well, I think one of the interesting points I heard on the reason to fill your treasury with Bitcoin is it effectively makes your company unshortable, because as long as you have some amount of Bitcoin in your company treasury, there is the possibility that Bitcoin could like shoot through the roof, and so it makes it difficult to short your company. I've heard that as like one reason why CFOs are interested in doing it. I think if you look at a lot of the countries who are looking at adding Bitcoin as like a part of a strategic reserve, it's effectively to like backstop their currency, not because they're going to start bartering goods or paying for it using Bitcoin reserves. I think if you saw significant transactions happening in Bitcoin, that would be that would be a threat or a destabilizing factor. But at the moment, it seems like they're looking to use it as a way to just bolster their FX, effectively the reserve value of their currency, to kind of prevent inflation, because it's the only really large scale asset they can think of that has a pretty good probability of appreciating over the next 10 years. There's no like FX currency that they could chuck in their reserves that they think would appreciate as much.
Great. Nice insights.
No, it's great question.
Anybody
Awesome.
else?
Well, I left my email in the chat. So if anyone wants to reach out afterwards, happy to to do a follow-up call or answer any questions that are interesting.
Would you mind dropping the email again, because I logged back on.
Yeah. I'll just post it now.
Thanks.
Pretty simple.
Yeah.
Sidney@maple.finance.
Wonderful.
All right. Well,
I actually had a question, actually, because you're so knowledgeable about like global markets and financial systems. There's Larry Fink he said the other day he was talking to the sovereign wealth fund, and they were asking him, should they allocate like 3% or 5%, right? Like how long do you think those are going to be activated? Is it like half a year? Is it next year? Like how fast do you think they're going to start rebalancing their assets under management to like hold like 3 or 5% in Bitcoin?
Towards Bitcoin?
Yeah.
I heard Ray Dalio say a similar number. He actually said a higher number, where he said it should be like in Bitcoin or gold, and he views Bitcoin as kind of digital gold, which does seem to be kind of like the dominant narrative for it. Is store of value. I think in terms of 3 to 5, 3 to 5 might be a couple of years out. I think they will start rebalancing and having allocations, perhaps from next year. Like if you look at Norway's sovereign wealth fund, I mean, I think I forget the stat. It's something like they have 13 bips of kind of every, equity in the world, on average, just by way of how large they're, how large they are. They're over $1 trillion. And it kind of seems silly that they should have a piece of every equity in the world, but you've got an asset that's been as that has performed as well as Bitcoin, and they don't have an allocation to it. So I would think, surely it's got to be being discussed by them at the moment, and I would think that those allocations, could begin as early as like next year. I mean, you've already got Trump's already kind of sounded, like rung the bell on the US holding it in a strategic reserve, and then you have countries like Bhutan, El Salvador. China has a lot of Bitcoin, so I would think, could make its way into sovereign wealth discussions next year.
Well, thank you for that. Thank you.
Yeah, good question.
Yeah, Sid, thank you so much. I mean, this is each time it's educational when you explain what you actually work on and your viewpoints.
No, thanks for having me, guys. Questions are really good. I really enjoy coming on. All right, well, I'll pass over the next segment.
Okay. Great. Well, thank you everybody for attending today. And until next time.
Thanks all.
Okay, thank you.